So my next guest, known for his skills in the kitchen and the stock market, and from time to time he kind of cross-pollinates them by letting, like for instance, letting the recent news and events in the stock market marinate. So let's bring in SlateStone Wealth Chief Market Strategist Kenny Polcari. So Kenny, I'm reading the report
Can't believe you did that.
I'm reading the report. You're like, yeah, we're just gonna let this marinate a little bit here. Listen, I see you talk about the algos, right? And they're having their way with this market, right? I mean, whatever the news is, they find a way to turn it into a positive. I compare it to the Visigoths when they sacked Rome. They could do anything they wanted to do. But is there more to the move besides algos and hype?
You know, I'd like to believe there is, because I'm still positive on the market. I'm positive on the economy. I'm positive where stocks are going. I do, though, think this latest surge up, especially over the last couple of days, has been really driven by the algorithms, driven ahead of what it was expecting to hear out of the PPI and the CPI. And, you know, I walked away with a very mixed feeling about where we are. I still think that inflation is sticky and is going to be a problem, but they're trying to, change the narrative. They're trying to tell us that, we're okay, and that 3+ % inflation is probably where we're going to be. That's how I read it. Mm-hmm. Remember, Bloomberg yesterday came out to say 3.6% is the lowest it's been in 3 years. As they flipped that conversation around to try to make you think, we should be okay with this. And look what they did. They took it right up through into a new century on the S&P, up to 53 and change, which I just thought was amazing. And I love the fact that they did it. I'm invested, so I'm going along. Did I chase anything? Absolutely not. Did I sell anything? I did not.
Right.
So that's what I mean. I want to let it marinate a little bit, right? I want to see how the market reacts.
Do you still see no rate cuts before the election?
I do not see any rate cuts at the end of the year because, in my view, and I don't know what everyone's looking at, I don't see that the data demands it. Your first guest, the young woman there that made the comment that they still see 3 rate cuts, I'm sitting there scratching my head going, what am I missing in this conversation? Because if we're looking at the same data, I just don't see it. Right. I don't see 1, never mind 3.
So I'm reading the report right now, and of course you talked about that it was a super hot PPI. Everyone wrote it off. I was in the same camp as you, and you mentioned, okay, now we just have to wait until June 21st. We'll see if this rises, if this increase is shown up in the CPI. But then you wrote a little ... capiche. So when my Italian friends say capiche, that's when they get a little frustrated. You getting a little frustrated here?
I'm getting a little bit frustrated because I like to go shopping when there's a sale taking place, and they just don't want to let it come in. I fully expected that after the PPI and CPI this week that we were going to see the market back off a little bit. Would have been a great opportunity to get some clients in, to get some of my money reinvested, and then I never got the chance because I wasn't chasing it. It kept going straight up, straight up, straight up. I said, okay, I'm sitting back. This is not my type of market where I'm going to chase it at the all-time highs. I'm not going to add risk at the highs at the moment. We're invested, so it's not like we're sitting there in cash. We're not. Right. So that's good. But yeah, no, it's a little bit frustrating because, like to your point, the PPI, which was more elevated than expected, those prices are going to come down, over the next 4 or 5 weeks, and then into the next CPI report, which is in June. So yesterday's means nothing because it's next month's CPI that's going to be affected, I think, by the higher PPI prices we just saw.
So I got less than a minute to go. And again, you've been voicing some concern, although you do have exposure to the market. I received an email from one of my subscribers, and he was upset, saying in part that people are cautious because we are told something is supposed to happen, yet it continues to be elusive. Right. Just like the calls for a recession, a pullback seems to be right around the corner, but it never happens. Listen, obviously hindsight is 20/20. What are you telling people who are frustrated that we're not just gung-ho, all in, go crazy, forget about being cautious, ride this wave?
Well, but you see, that's why, to his point, to whoever wrote you that email, that's why you have to create the plan. And you know this as well as anyone. You create the plan and you execute on the plan, and you don't try to pick tops and bottoms and wait and all that. Yeah, I would love to see the market back off a little bit, but when it doesn't, you got to be strategic and look for the opportunities within the market. So you're staying invested. You're continuing to build a portfolio. You don't just sit there and do absolutely nothing every single day when you've got money to put to work. And by the way, as a fiduciary, I'm charged with actually putting your money to work and helping you grow your money for the long term into generational wealth. And that's what we do.
All right. So, Sean, if you're watching, capiche, capiche. Kenny, thank you, my friend.
But you got to do it with your hand.
Yeah. Talk to you again soon.